What's going on, guys? Brian's here. Today is Saturday, December 4th, 2021. Now this video is in direct relation to the video that I just released a few days ago. So if you haven't seen that, I encourage you to check it out. I'll leave the link in the description down below. We talked about 4 tickers in that video: the SPY, QQQ, Facebook, and Netflix. Now out of those 4 tickers, 3 of them went almost exactly the way we anticipated. 1 of them did not. So this video is just going to be about the concept of a stop loss, because if all 4 of them, or if 3 out of the 4 did not work and 1 of them did, we still would have ended up being profitable. So that's why I wanted to make this video. Now, just like many of my other videos, I like to start off by looking at the SPY on a daily time frame, just to provide a little bit of context for you guys that are watching this video in the future. You can see the market is in a little bit of a short-term pullback as we're sitting at the 50-day moving average. If we jump right along, these would be the 4 tickers in which we're going to discuss here today, or what we started talking about in the previous video. Now, this was when I recorded the video. The game plan for the next day was to have the SPY gap and go. NASDAQ was a gap and go. We anticipated Facebook being a gap as well as a potential go. And then Netflix was supposed to be a sell-off to this level right here, which is 2 sigma. Now these zones and levels that you see plotted on the charts, these are support and resistance levels drawn in from the quant trading app Algo. Full disclosure, I am the lead developer on the algorithm. If you're interested in checking it out, link is in the description down below. But just know a lot of my trade ideas come around these levels. We get automatic alerts, and we're also using Confluence from a couple other options flow algorithms, which I'll get into shortly. So before we look into each of these individually, let's take a look right here. We expected Facebook to actually move and go up here, but it did not. So in other words, Facebook ended up being, we'll call this a loss. Netflix was a win, Qs were a win, and SPY was a win. So this is 75% accuracy here in terms of what we anticipated happening. Now let's just say the SPY did not do this, the Qs did not do this, and Facebook ended up also being a loss, but we ended up being right on Netflix. A win like this will actually offset your losses from these 3 if you know how to manage your positions accordingly, as well as honor your stop losses. Because assuming you took your stop loss right here, you took your stop loss right here on the SPY the next day, and you took your stop loss right here on Facebook, but you let this one, which would be your winner, run, as they say, you're talking about getting over a 10x return on your investment here. And if you only lost about 1 to 2x on these 3 trades, you still end up being profitable. But in this case, that's not what happened to us. We ended up being 75% accurate. So next, here's the SPY. This was the previous day, which was a Tuesday. Now, if you want to know how or why did we anticipate this being a gap up, we talked a little bit about the volume profile, which is something you guys know I look at. So this right here was the profile for Tuesday, and I had outlined it in the Discord. This is what's known as a B profile. So if we just swipe over to the Discord real quick, and we actually jump to, let's go to the futures tab, I believe right here. I actually posted it in the public section, which was a freebie for everyone in there. This, what you guys are seeing, is from the premium section for the gold members. But this for right here, this is what the profile looked like. So this was the Qs and this was the SPY. So I was talking about how this B profile usually indicates that we should have continued momentum to the downside. However, I did a previous video on this last month, mid-October, early October, about whenever we get this type of profile, if the market gaps up over the value area from the previous day, we're more than likely to squeeze to the previous supply zone, which in this case would be right up here. So that's why I was anticipating the market going higher the next day, and this would be the SPY. So the same situation, if the market opened over this level, we can expect it to go higher, because not only are we gapping out of this value area, but we're also going to have the 2-day anchored VWAP look something like this, and we can use the 2-day anchored VWAP as our level to risk off of, taking a stop if we get below that, and then looking for a potential re-entry at the previous day's point of control. You guys can check out a couple of my other videos in which I discussed that in a little bit more detail. So because I trade futures also, I don't trade just options and equity. I was able to get into that trade after the market closed, because this right here is after hours, and if I see the opportunity after hours, I will take the trade on the futures. So in this particular case, this was the 50% retracement. So from here to here, this is the 50% retracement, and this is the 61% retracement. So I was scaling into some futures contracts with the stop below the 61% retracement, and I was targeting these levels as my profit target. So that was the NASDAQ, and here goes the ES. So similar situation, was already up 23 points, and I was just letting everybody know how exactly what my risk is, exactly if you're trading the micros. We're currently up 23 points on the micro contracts and 7 on the MES. So that means with one contract, pretty much was risking about $175 overnight to make about $450 if these targets were hit. Now, the way the market actually ended up squeezing, we actually hit the profit target, and I didn't even have to swing it overnight. So it was an amazing trade, but you guys can see from right here to here, to here. Great trade, just trading traditional 50% pullbacks on the Fibonacci's right there. But more importantly, this right here is the Qs, right? And this would be the value area. This would be our point of control. And as was mentioned, if the market gapped up over this, we were more than likely going to squeeze higher. However, the bulk of the move did happen overnight. If we swipe back to the volume profile here on the 30-minute time frame, we can see this is where the market opened up and it squeezed, but there was a huge chunk of the move that already occurred overnight. And that's why I like having a futures account, to be able to capitalize on moves like this, because if you trade it here, you can see the first 30 minutes of the day, this was pretty volatile, and this looks pretty bearish at one point, because it would have meant we opened here and then the market sold all the way down off to here. So the first 30 minutes, this was a big red candle. But if you're in from overnight, or if you're in from the day before, you have a little bit more flexibility. Now, when you trade options, you have to, if you're trading options on the SPY, you have to place your order by 4:15 Eastern time PM at the latest. So you do have a little bit of time after hours to get into the trade, but then you do risk the overnight gap down. And if we were to gap down, these calls would have ended up being crushed. If we actually just go back to the chart right here, this is again what it looks like. We have this right here, market gaps up, and then we push higher, and this is the 5-minute time frame. Now, looking for confluence in other algorithms aside from the quant trading app algorithm, we're currently using the TradyTix algorithm in the Discord. So this is another service that you usually have to pay an extra $200 a month for, but it's included in the quant trading app membership. So if you are a Gold or Premium member, you have access to all the commands that TradyTix offers, and it's no additional cost. And the way this reads right here is, I showed this in the previous video, but this is where the SPY was pretty much at, and this is where the algo was saying the options flow was for the market. So it was anticipating there being a divergence between the two. In this case, this would be read as bullish divergence, because the SPY should have been up here, which is where the options market, you can say, was pretty much expecting the SPY to be. So it's a little bit of divergence between the two, and that was in the extra confluence in which I had as the market closed, saying we're more than likely going to squeeze a little bit higher. You never know how high something is going to go, so that's why I wanted to get in from the previous day. And then lastly, if we look at the Qs, this is where the Qs closed, and you can see the Qs did make it the next day, and it ran up. It actually went past the target, and it went straight to the supply, in which we were talking about from the volume profile, which we can see right here. So here is our supply zone. You guys, if you see my previous videos, you know this. These are the high concentration of volume nodes. This was our point of control. We extend that out right here. So we're pretty much saying this whole area can be interpreted as supply. So this is where the market gapped up to, went straight up to supply before we ended up ultimately getting rejected. Now, moving right along, this would be Facebook. So Facebook is in the QTA buy zone, as we call this right here. And the thought process should be, do I want to swing Facebook, or do I want to keep it on watch for the next day? If you have 15 or 20 minutes before the market closed and you actually are aware of this, within the Discord, we do get notifications right here. So they come through as anything hits one of the levels that the algorithm is expecting some sort of a move to happen, whether it's a buy zone, a sell zone, a 2 sigma level, or a regular weekly buy support and resistance level. So it comes to right here, so we get this in real time, and the first notification would have occurred here, and the next notification would have occurred right here. And this being 5-minute time frames, that means we have essentially about 9 minutes left or so in the market to be able to decide if this is something you want to swing. Now, if you're looking at this and you want confluence, the next step would be to compare it with another algo, and that's where the TradyTix algo comes into place. So I ran this query in the Discord, and it showed that this was the divergence right here for the options flow for Facebook. It was saying that Facebook belonged up here, but this is where the stock price was, and you guys can see this right here. So this would be the stock price. So about, we'll just round it and say 324, and that's 324 right here. So this is the stock price, but yet this is where the options market is. So expecting a gap up is something that's not going to be too completely crazy to expect when we have two algorithms, TradyTix and the quant trading app BuyZone, saying expect some sort of a bullish move. However, seeing this and then what we just discussed in the Qs and the SPY, I was expecting a little bit more momentum in Facebook. So the plan was, I was actually looking at the 335 calls, as even the 340 calls, expecting it to go as far as there, but as you guys can see, that did not happen. So even though I took this trade and I was in this, we already had a win in the futures from the night before from the SPY and the Qs, came in the next day and started buying Facebook calls. Now Now, I was a little bit stubborn because usually if I enter a trade on a gap like this and something breaks down below the buy zone and it also breaks down below VWAP, I usually will cut the trade right here and keep it as a small, tight stop loss. But however, since we were in the buy zone, I was willing to give Facebook a stop below this level here or below the previous day's low. In this case, you guys can see that ended up happening. I took the stop right around here because I was realizing the relative weakness in Facebook in comparison to the SPY and the NASDAQ. The SPY and the NASDAQ were starting to hit their resistance, yet Facebook was still down here. That meant if the SPY and the Qs were to pull back, Facebook would for sure more than likely pull back. Now, if we keep things moving, we can see this on the left-hand side here is Facebook, again, 5-minute time frame. And on the right-hand side, we have the 335 call. So this strike price right up here for the weekly options. So the market opens, these calls are going for $2.50. And as Facebook pulls back, they drop down to $1.50 and ultimately, taking a loss around $1.25 or so right before it completely broke down. So we're talking about a loss of about $1.40, $1.20, give or take, in premium on this option. However, again, we're already up on the Qs and the SPY. Now, even if this was held until expiration, you're talking about just a $2.53 loss. So $250 was, say, if you held this all the way until Friday, and obviously Facebook did not close up here. If we keep things moving now, let's take a look at Netflix. Netflix, as we discussed, the game plan was to expect Netflix to sell off. If I just come back to the Discord, you guys can see right here in the bot request, this is where we can request this information. So right here, this was the SPY on the first, and I think this was the morning before the market opened, and then this was the same thing. So showing you guys Facebook, it comes from right here. You can type in any request right here. This is the command line, and you just put in whatever tick you want and we'll get this information. In the video, I also showed you guys right here how it works. So TR, Algo, Flow, Facebook. So this was it as it popped up. And again, this video was recorded on Tuesday after the market has closed, and it was available from pre-market just to prepare everybody for what was going on. And then the same thing with Netflix. So if we just want to see what the Netflix query looked like as we requested it, there we go. Netflix was bearish in comparison. So I was just saying, if you were to choose which one of these two did you want to be bullish, obviously it would go with Facebook, because even though these were both at the buy zone, Netflix was deep below the buy zone, but sometimes these things rubber band over it, at least for the opening gap up. That's how you can choose which one you want to trade. So as we can see, Netflix did gap up, but we had no expectation of this actually continuing the next day. So moving right along, here goes the algo flow for the options market, and we can see it was bearish from right here. This query was run at that time. It was extremely bearish. So even though Netflix gapped up, the moment it broke down below the zone, any retracements to VWAP or so could be shorted. In that video, I was mentioning the puts to be looking for would be the 630 put or the 635, but there was more open interest on the 630 put. So if we actually take a look at how that traded, at the morning, assuming you just got in right at the open, we're talking about a $2 contract. And even though Netflix did push a little bit higher, this contract only lost about 40 cents in premium. Now, the VIX has been extremely elevated right now. So if you're buying puts, and even if the market is pushing up a little bit higher, if the VIX is still rising, your put is actually not going to lose that much premium. At least for the last couple of weeks, that's how things have been going, because bears are clearly in control. Moving right along, in that video, I mentioned first take profit would be this 2 sigma level, which is a profit target for shorts if you're using the quant trading app algorithm, which would be 635. We'll round it on Netflix, and at that point, this would have been right here. So you're talking about 150% return. This contract was going for $5. So assuming at this time you held Facebook and you were still holding Netflix, you would be up overall. Let's for sake of argument not even count the profits from the SPY and NASDAQ. Let's just say you didn't trade the futures, you didn't trade SPY options or QQQ options. You just decided to focus on Facebook and Netflix. You still right now at this point would have positive cash flow because at this point you're up a whole lot more on Netflix than you're down on Facebook, even though you did not take your stop loss on Facebook. Now, the point of this is if we take our stop loss on Facebook when we're supposed to, we'll actually be up a whole lot more, because assuming we were wrong on the other tickers like the SPY and NASDAQ, then we wouldn't really have to worry so much, because let's just say out of all 4 of them, how I opened this video, if 3 of them failed and only 1 of them worked, if we cut our stop losses on each of these, and assuming we took a $1 stop loss on the option on these 3, that's a $300 loss right here. But this contract is up $3 at this point. So we're talking about on this one win, we're pulling in $300. At worst, we're break even. even though we have a 25% accuracy or 25% win rate. That means if you're just right on 2 out of the 4 trade ideas, you end up being up 2 times what you would be up if you're just right once. However, by cutting the losses a little bit sooner or having some sort of a proper risk management plan, you can really open up your P&L each month. And occasionally, because there was enough confluence here and the market was extremely bearish going into the end of the week, you can end up in a situation like this where if you do have a couple runner contracts or one, you're talking about pulling in, even holding this until the end of the day down here. This is a 650% return, which is nuts. You're talking about $2 turning into $1,500. So $1,300 in profit, and holding into Friday and assuming you're out anywhere in this zone here, you're talking about a 1,300% return. So this contract was going for $30, which would be $3,000. So $2 turning into $3,000 in 1 to 3 days, just looking for confluence between a few algos and using a little bit of understanding what's relatively weak. Apple at the time was a lot stronger. Google was also stronger. So out of the FANG stocks, Facebook and Netflix were the 2 of the weakest. We were expecting Facebook to go a little bit higher. We were not expecting Netflix to go any higher. So Netflix ended up being the major winner. But again, even if none of the other tickets worked and you just caught Netflix, but you took your stop loss, you're talking about this can make your entire month when you're in a trade like this. So that's what I really wanted to go over in this video, guys. A lot of the trading you guys will be seeing will be comprised around the alerts and the algorithm from now on the YouTube channel. There'll be obviously other videos, but this stuff right in here, just so you guys can see, if you wanted to see example of it live, we can type in like TR, we'll put in algo flow, and let's just see for the SPY right now what it's going to produce. So SPY still has a little bit of a bearish outflow, but it's as simple to use as that. We get a little bit more information right here. These are automatically, and these are from the QTA alerts, and all levels that you see drawn on the chart actually come from, let's go to trade recaps, and all of these levels right here are generated from the QTA algo. So the QTA algo, in a sense, will tell us where to take the trades, using the TradyTicks algo to tell us how much size or to use for confluence. So this right here is the 2 sigma level for the Dow Jones. This was the IWM, and these alerts came through live right as it hit it. So on a 0-day trade towards the end of the week, each of these trades were about 100 to 200% return. Very nice, easy wins. And we're talking about, if you trade futures, these right here are about 200 points just from getting the alerts that the Qs is coming out to 2 sigma. Now it actually missed 2 sigma by I believe by 4 cents or so. So this alert did not go out automatically, but I always have eyes on the NASDAQ and the SPY. If you guys have any questions, leave them in the comment section down below. I do have to catch up to some of the previous questions that you guys have been asking on some of the other videos. I've just been really swamped developing a lot of code for the algo, building out the automatic alerts, and a few other things. So there's a lot coming, especially for next year. I'm pretty excited about what's coming, guys. If you have any questions, leave them down below, and I'll catch you in the next one.